Hey, welcome to my YouTube channel. Now we're going to talk about the house price drop. Figures came out yesterday and house prices have now dropped the biggest drop in 10 years on an annual basis. So we're talking about February 22 until February 23. And so we've just seen a very, very big drop. Now we're going to go into that and we're going to address some stuff that we've been talking about this week as well. But if you want to keep updated on all the what's going on in the property market, we've got tons of new content planned. We're actually considering going up to 2 videos a week very, very shortly. So while you're here, make sure you take that finger of power, smash that subscribe button and hit the bell notification. You will get notified of every bit of content that comes out. So let's talk about house prices. Now, yesterday or the day before, I made a video and I was talking about Reuters, and Reuters are someone that provide the news to the news. And so they had done some polls and analysts were saying in that they felt that the drop this year, 2023, would be less than 3%. 2.4 or 2.8 it was. So it would be less than 3% drop in the market for this year. Now, obviously, in the comments, some of you have said, well, look, we've already dropped in August, September, October, November, December last year. That's true, but they're talking about 2023, right? And so just take that when you're listening to this data and understand that. So what we're looking at here is data from Nationwide. They are one of the biggest lenders in the UK, so of course they know what's going on. They also know what's going on, don't forget, because a lot of people talk about lag in data, including myself, right? And so we haven't got the data on the houses that completed around the time of the mini budget, do we? But the companies that do know what's going on there, because they're the one that have done the mortgage approvals and they're working through those cases at the moment, are the mortgage companies. So Nationwide are saying that they feel that the market is going to drop between 5 and 6% in 2023. So forget the drop that we've already had at the end of last year. Just focus on 2023. They feel 5 to 6%. Now, they have a better position than any of us here to actually really understand what's going on, because they're working through deals today that will complete in the summer. So they really do know what's going on more than anyone else. So they might be wrong. People are wrong, analysts are wrong, but I think someone that really does know is going to be these mortgage companies. So let's talk about the drop now. We've got a drop for the year on an annual basis of 1.1%. Nothing to worry about too much there, but it is the biggest drop in 10-year period. Now that gets a headline and that gets everyone's attention. So what's going on this year? Because Reuters are saying 2.4 to 2.8% drop for the year. Nationwide are saying 5 to 6%. They were saying 8% at one time, and that's changed now to 5 to 6%. So what do they know? Well, let's look at the last 2 months and what's going on there. And just to be very clear, because I know the comments get so excitable on these videos, I'm not saying that I know what's going to go on in the market. I'm also not under any illusion that I could move a market at all. I'm just sharing what other people that have more information than us are saying, and then I'll give a little anecdote on what I'm going to do. So the market in January didn't drop. We had a flat market. So we had a 0% drop. So this year, that's how that started. Now we've just had a 0.5% drop, minus 0.5%. So 2 months now, if we divide that, we've had a 0.25% drop on a month by month basis. That's not a crash. To get to a crash, we need to be over 10% drop on an annual basis. Now, if we carry on at this rate, some months at 0, some months at 0.5%, which we might get worse, of course, then we're going to be looking at a 6% drop for the year. That's what Nationwide are telling us they're expecting. And so like anyone, I know there's going to be people jumping in the comments saying, have you seen the RICS reports and all of that? I have faith myself in the companies that are managing the mortgages, that they have more data than most people. because they're the ones that are actually approving the deals at the moment. And so let's just say potentially the market is going to drop by 6%. What do we need to do? Well, here's the thing. A lot of people get very excited about these figures and numbers and stuff like that. But if you buy and hold, then this will just be a point in time. And that's the good thing about property. I talk about that quite a lot. Whereas if in business you go out and you invest in something and it doesn't work, you never get your money back. Whereas in property, there will be highs, there will be lows, but on average, the price will double every 10 years. And so if you don't need to sell your property, which a lot of people have decided they don't want to sell their property in this market, and that shows in the new listings with estate agents, then you just ride it out. What you do need to do is make sure that you're more worried about not the price, but the interest rate. So I'm not so concerned on my buy-to-let portfolio how much it's necessarily worth. What actually really is more of a focus for me is what is my monthly payment as opposed to the rent I collect. What's going on in the market with the energy crisis, and is that causing any of my tenants to have financial difficulty that they will then not be able to pay my rent? These are things that keep me up at night more than actually the price of my house portfolio. Now, it is obviously something that we look at. Of course, I look at my portfolio and I say, wow, how much is it worth? And I do that every month, actually. But it isn't, it's just a vanity metric, really. So with regards to investing and buying and all of that wonderful stuff, look, if you're a residential buyer, then maybe you might want to sit it out for a few months and just see what happens, because yeah, Nationwide are saying 6% drop for the year, but if it's more, then maybe that will benefit you. But if you're an investor, what I always talk about is buying properties that you can add value. Now, even if the market went down 10%, I'm looking for a deal that I can add way more than 10% to that property in value. And if I can add more than 10%, then why would I stop investing when the market is going down? It doesn't make any difference to me. In fact, deals will be getting cheaper because the market on a whole might be 10% down, but there will be certain people that need to sell, that need to get a fast sell, that might sell that property to me at a 20-25% discount. Then I might be able to add some value of 20% to it, and so then I've created equity. And so when I'm looking at deals, I'm looking at what's the worst case scenario. Can I buy a deal and can I fix a mortgage rate for 5 years that gives me that certainty? And that's what I'm doing in this market, looking at worst case scenarios. So the worst case scenario is this is the rate and I fix it for 5 years and it's at a higher rate than it might be next year. That's fine as long as rents are unlikely to drop, and that's looking quite likely because there is not enough rental stock still. And so that's what you need to be looking at. What's your alternative? You can put it in stocks and shares, which is very, very volatile at the moment. You can put it in cryptocurrency, which can get wiped out 50% in a day. Or you can leave it in the bank where it's getting eroded by inflation. So I'm not saying go blind into deals, but I am saying if you can find a deal where you can add value, not talking about buying a new build property, I'm talking about buying a rundown property, maybe from an auction, maybe off market, maybe through an estate agent where it needs some love, attention, those sorts of deals can work very, very well. And then you can bring up the value in the property. Yes, materials have got more expensive with inflation, but house prices have come down a little bit already. So there's lots of good things out there. You just got to go looking for it. In the comments, I know you guys, some of you are going to say, look, it's not the right time to buy. The market's going to crash. Well, that's your prerogative. It could crash. It could crash 50%, but it really wouldn't matter to me that much if I had it on a fixed 5-year deal and I'd added value to that property. I'm more worried about getting some monthly cash flow, and in 5 years from now, the market will have recovered like it did in 2008. So let me know your thoughts on this. What do you think? Where do you think the house prices are going to end up? So we're 1.1% down for the year annually now. We've gone through a pretty rough period already. We've already had rates gone up. Nationwide have revised their drop down from 8% to 6%. What does that tell us? Let's have a conversation about that. Smash the like button on the video, guys. Comment below. Try and keep it friendly. Check out all the other content on my channel, including this video on how to buy a house for £1.